Hello, my name is Robert. I'm a tax attorney, and we are going to go over what happens if you don't file taxes. Well, the IRS does the tax return for you if there's enough data. Some years down the line after you have not filed, the IRS will do the tax return for you, which is called a substitute for return, also known as an SFR. They essentially will calculate your tax return as if you were single with one dependent being yourself. They do not take into consideration other expenses or dependents. The financial result changes depending on the income reporting. When you do not file taxes, what happens depends on the type of income you receive. Now, there's W-2s, 1099s, people getting a combination of W-2s and 1099s, and other types of income. Unfiled taxes and W-2s. If you're single and you're receiving W-2 income, if you claim single and one dependent on W-4 form from your employer, it is likely you will owe nothing and the IRS will just skip doing the tax return for you. Same thing happens if you claim single and zero, but you probably missed a possible refund. Unfiled taxes and 1099s. If you received income through 1099s, the IRS will calculate your income based on the totals of the 1099s that were received. If the 1099s are so small there would be no balance due, often the IRS is just going to skip doing the return for you. Most people are going to owe because there will be no expenses or cost basis put against your 1099. So if you traded a bunch of stocks, it's just going to go based on the sale totals. If you had a business that received 1099s, it's not going to include the expenses. W-2 income and 1099s. If you receive W-2 income and 1099s, you probably will owe a balance. Even if you claim single and one, it's likely that the additional income reported on the 1099s will cause a balance due since no expenses or cost basis will be credited against the 1099 income. So basically, say you made 50,000 of W-2 income and then you had 20,000 in 1099s. Well, you might have had the correct withholding, of single and one or single and zero even, but because the 1099s are there, it's still going to create a balance most of the time. Other types of income. If you received income from something other than a W-2 or 1099, the IRS generally has nothing to use to file for you with. It's possible the IRS will skip doing the substitute for return altogether. States may come up with a different result. California may file a tax return for you based on a professional license or business license and come up with a balance for you. A good example is you could be an attorney and not live in the state anymore and be licensed in California, and California will send you a bill sometimes if you don't file a California tax return, and then you have to explain that you're not there anymore. Filing a tax return after a substitute for return. You can file a tax return after the IRS has done a substitute for return. Most of the time, your filed return will come up with a lower balance due than what the IRS came up with for you, since you can add dependents, expenses, and cost basis. Sometimes it will even wipe out your debt completely. Get a free detailed tax case evaluation. Call us at 888-515-4TAX. That's 888-515-4829, or go to trp.tax/start. If we cannot help you, we'll tell you. If you cannot afford help and want to do it yourself, go to trp.tax/taxhelp or Google TRP Tax Help Guide. If you need a question answered, comment on our YouTube videos and a tax attorney will answer. Thanks for watching, and please like and subscribe.